Good afternoon. Good afternoon, and welcome to BizTech's Asian Midday Market Watch. It's the 1st of August, and time really flies. But we have today on Tuesday, Charu Chanana, market strategist from Saxo Markets, coming to us from Singapore. Charu, as always, great to have you on the show.
It's a pleasure to be back with you, Brian.
Now, the years whizzed by so quickly. We're the 1st of August. But before we get your insights, Charu, I'm going to take a look and see how markets across the region have performed. We start, however, with cryptocurrencies. Bitcoin nudges below the 29,000 mark. It's 28,859, down 1.86%. Ethereum is at 1,825, down 2.1%. Now, looking across the regional stock markets, we start where you're at, Charu. First, at the SGX, the Straits Times Index is down 0.14%. KLCI is down 0.38%. Shanghai is up 0.04%. The ASX All Ordinaries is up 0.62%. The Nikkei is up 0.71%. The Hang Seng is up 0.13%. And rounding out the numbers, we've got the Kospi, which is up 0.98%. Charu, your view on market performance in the first half of the day?
More or less a strong performance, Brian, as I can see it, except a few laggards, as I would call them. And I think pretty much of that continuation of the disinflation story that we are seeing in the US, that continues to have some legs as of now. And, we've seen US equity indices close in a positive zone as well for the month of July. And the S&P actually notched a fifth consecutive monthly gain as well. So overall, I think the story really is about the tightening cycles at or near the end. And that is obviously providing some room to Asian markets as well to continue to rally in the session today.
Now, Charu, the news of the hour is basically the China's PMI is in contraction. The Purchasing Managers Index came in at 49.2 in July. That's compared to 50.3, which was expectations by economists in a Reuters poll. What's your take on that continued bad news out of China?
Yeah, absolutely. I mean, as much as we've seen the authorities starting to ramp up a little bit, I would say, on the stimulus measures, I think it will obviously take some more time for these high frequency indicators to show that kind of a recovery. And especially today's release, what you're talking about is in contraction. I mean, it's again, boding completely in sync with what we saw yesterday as well on the official PMI numbers, where manufacturing remains in contraction despite a very small recovery, and services was actually sliding down towards that stagnation zone closer to the 50 level as well. But today's index, the Tyson PMI, is actually a reflection of what's going on in the small and medium enterprises, and it's a reflection of what's going on in the export-oriented industries as well. So it's a more focused indicator. And certainly, again, it's also showing the impact of that structural shift that China is having, a little bit away from consumption because of its, demographic trends, but also because of what's going on the geopolitical side of things. So as, we've discussed this also previously, Brian, structurally, it looks like there are a lot of headwinds for China, even though cyclically and tactically, there are some stories, there are some sectors that are getting a lot of focus from the government, particularly energy transition, particularly electric vehicles. So there may be some cyclical opportunities there.
Now, the other news on the hour, which has just come out, is the Reserve Bank of Australia has held rates steady. What's your take on that? Obviously, the pause is in relation to several issues. Walk us through some of the talking points.
So certainly it was actually a very close call for the RBA, and the markets were also pretty confused about it because analyst expectations were pointing towards a rate hike today, but the market was completely not pricing that in. And that's what we got. We did not get a rate hike because, the indicators of the economy are so much divergent to each other right now. So inflation has cooled. The second quarter inflation number came out at 6%, which was significantly lower than 7% in the previous quarter. quarter. So certainly that seems to be the right trend, although we are still far away from targets there. But on the other hand, then the labor market indicators for last month were indicating a still very tight situation there, which means that those wage pressures can continue to push inflation higher as well. So there's a risk that the RBI needs to watch. But I think for now, they've taken comfort in that downtrend in inflation, while they have still kept the door open for more rate hikes if needed. So I think potentially we are still towards the end of the tightening cycle in Australia as well. But if these wage pressures feed into inflation and we do see some kind of an inflation shock coming back, I think the central bank is pretty clear that they may have to hike some more.
Now, Charu, on a very different note and far away from us, uh, Chile has signaled basically the start of the emerging markets easing cycle. So they've cut their rates by 100 basis points there. That's not a country that we normally look to in terms of leading indicators, but I think the markets have been looking at that as a sign that basically that's the point of inflection.
Absolutely. I think very exciting times for emerging markets in general, especially if you look at Latin America, also parts of emerging Europe, they were the first to start raising rates during the pandemic. They have actually significantly raised rates higher, and inflation has come down from the peak. And Chile's move, it was much larger than expected as well. The 75 basis points cut was expected, but we got 100 basis points. And that just lays the foundation that emerging market central banks were just waiting for that pause signal from the Fed, and that's what we got this time. We got a very data dependent approach from the Fed, kind of not committing to any further rate hikes at this point, which is a huge breather for emerging markets. And then that gives them the ammunition to start cutting rates. We are getting Brazilian central bank announcement due on Wednesday. I think that's a huge case in point as well, because these rate cuts can really signal that the opportunity in EM equities, the opportunity in local currency EM bonds could be quite substantial for investors.
Now, that's it for BizTech's Asian Midday Market Watch. Thank you very much, Charu, for coming on the show.
It was a pleasure to speak with you, Brian.
I'm Brian Fernandez, and we've been speaking to Charu Chanana, market strategist from Saxo Market, on BizTech's Asian Midday Market Watch. This video will be on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.